Hey guys, welcome to this episode on the stochastic oscillator being used with the moving average together. How it can help you see when their movement is coming up and you can capitalize on it. Um, I'll break this thing down to see, but what if I show you that, for example, here's one of my stochastic lines, and of course we know that the MACD and the stochastics are very good for finding divergence. So even though the market is falling, here telling me that the market is going the other direction. So it's kind of letting me know that it's going up. The momentum is weakening. But what if I tell you that by adding the 9 moving average exponential in there, it will improve your odds on catching these big runs that will go up. So in this particular case, if you would have caught it around 94 cents, this thing could have ran up to $1.64 before you got out. Okay, or let's say you caught it down here. There's another one that's showing around 62 and you can catch it up to 95. Catching these moves before they happen by combining the moving average exponential with a stochastic. Alright, so let's break it down and show you how I do this. The stochastics, the market's always changing, so you always have to tweak what you're looking for. And what I mean by that is this is my core. This is what I always keep as a background of coming back to. Like I have a stochastic fast, 2 of them, and 2 stochastic fulls. Okay, and what I do is I always use only one of them. Like I only use the fast K. The fast D, I turn it off. So I got my overbought and oversold, which are the blue lines for the 80 and the 20, and I get rid of the up and down signal. So I'm only using the K's for this. So it's the K14 is what I'm looking for. The 3 is for the fast D. It's useless. I don't care for that. So I'm using a 14, a 40, a 60, and a 9. And this is my core base of where I start looking to see which one's going to give me the signals, because the market's always changing and it makes it where something works today, it might not work next month. Okay, so what am I looking for? Well, for example, here the market is going down, but then it decided to go back up. If I look at these 3, they all told me practically nothing. But this one gave me a signal that it was going up, that the market was weakening, that the bulls were back in control. So 3 nothing, 1 on the positive. Then you have another one down here before the market took off. So it was down here around $1.22 and it took off to $1.89. That's a nice little run. When I look at these 3, they didn't tell me anything. But this one did. So as of right now, the 9 is the one that I'm actually going to be using for as long as the market allows it, because this is the one that's actually telling me. Here's another little run. It was going down. This time there's 3 of them that caught it. Not bad. This one still doesn't catch it. So as of right now, the 60 is not being helpful. But does not mean in the future it won't be. Just right now it's not helpful. So these are the ones I'm going to be using. Okay, so I combine them. I'll take 2 of the best ones that I like, and then I turn them into, wrong one, sorry. Then I turn them into this. So all I'm doing is putting 2 stochastics together, and then I throw in that moving average 9 on top of it, which is the light blue. So particularly I always keep it 2 because it gets too confusing. You don't want to be using too many stochastics in their lines. Then your brain won't pick up on it. Alright, so going back to those lines, let me just make this a little smaller, easier to see. Alright, so that makes it a little harder to see. There we go. For me, when the stochastic comes from underneath and starts working its way up, that's when the buyers are in control. And then when the market stays on top, still the buyers are in control. What I start paying attention to is when it starts to fall, because then that means the bull are in control and the bears are in control. The bears are controlling the market, and it's going to be going to the downside. So anything that goes down and stays down here is bearish. Anything that goes up and stays on top is bullish. What the 9 moving average does is that if it stays on top of the stochastics, then the momentum is going to be going down. But watch what happens as soon as it crosses to the downside. When you see the 9 crossing beneath it, that's a good time to start looking into buying, because you're catching it early before it went from 61 and it started taking off to 96. Okay, How far it goes, I don't know. See, one moves faster than the other, so you kind of have to keep an eye, and you have to judge it. For example, I don't like catching him up here, but still the same thing. It went from being on top to crossing underneath it. As soon as it crossed underneath it, it'll be about right here by the time you caught it. That's why I don't like catching him up here. It went from 157, and you could have rode it all the way up to 190. Still a nice run. I don't recommend up here. I like catching him on the bottom. Like this one. This one fell. And as soon as it crossed underneath it, if you would have gotten somewhere in here, even if you caught it late, $1.22, you would have rode it all the way up to $1.40. Okay? And this, of course, works in any price range. The higher it is, the higher the moves. You're getting to these $20 stocks, you're going to be going up $2-3. Instead of going to these penny stocks, then the movement's going to be smaller, but still profitable. All right? Always, it stays on top. The market's bearish. So it's going down. It just keeps falling. But as soon as it crosses underneath, the market turns around. So there is a way of tweaking the stochastic to where by adding the 9, it improves your odds. So while it's not only telling you about divergence, but it's also giving you that it's a good time to look into. Maybe the market's going to turn around on you. Nothing's 100%. Nothing works, the way we always want it to. That's why you need to, use smart judgment and make sure you're doing your homework. But hopefully this will help you guys out on another way of trading. See you guys in the trading room.